Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame impulsive structure, where we're looking for a wave 5 to the upside, where the most common target for 5 is between the 1.236 and the 1.618, taken from the high of 3 to the low of wave 4 with the Fibonacci tool. Now what's important is that in this wave 5 you want to see a 5-wave structure. If price is just going to pump straight towards this area and reach the 2022 range highs, that might be more bullish for maybe then a liquidity grab, but then instead of a rejection, you're going to get a liquidity grab, a bit of a rejection, a range, maybe some bullish divergences, CVD divergences forming just below the resistance area of 32k, and then continuation. So it is important to wait and see how price is going to move towards 32k and then observe the reaction over here. Another thing to look for is the volume. If price over here is going to move towards the upside and we get similar volume than we had in wave 3, it is more likely we might again see continuation, because a new high in a wave 5 and then a 5-wave structure to the upside should be made with a lower volume preferably. If you get volume that is similar to a wave 3, you might also get either an extended 5 or it's not a wave 5, but this was already a 5-wave structure and this is a wave 2, and then potentially a 1, 2, and then you get a bigger 3 for more upside. Now when we look at time, preferably this is the low of wave 4. That's also what I said in the group over here in the section updates, where I wrote time wise I prefer this to be the low of wave 4, after then a zigzag in a wave A, WXY, and then eventually a wave C to the downside, where C hit the most common target area for a wave C, which is the lows over here, for then the end of a wave 4. Because if we look at wave 4, price and time both have relationships in Elliott waves, and it's not that this wave 4 can be extremely long ending somewhere over here and still be part of this wave 2. If you just look at it, it doesn't fit the proportions, right? And Elliott waves is also about proportions and time of the different waves. And what I like to do, and that's a little tip I actually gave yesterday in the Telegram group as we were talking about it, is that you can put your chart on a line chart and maybe even put all the analysis out of sight and just look at the proportions of the waves, and then you see that this over here still works for a wave 4 compared to a wave 2, as this wave 4 is shorter than the 3 fib time of a wave 2, and then a fib time taken from the high of 1 to the low of 2 to the high of wave 3. The 3 fib time is somewhere over here, and I usually don't really like to see that one crossed. But that's not the case, as this is then the low of a wave 4, and that's fine. But if you would put a white box from the high of 3 to then potentially a future low of 4, if this price action over here is still part, or you think it's still part of a wave 4, so we go down once more, then you see that it's going to be incredibly long compared to then this little small wave 2 over here. And that's really just out of proportion, right? Because sometimes when you look at the waves, you can just see, you don't even have to know too much Elliott wave knowledge, but you can just see it's not right. So having another move towards the downside in a wave 4, well, if we get a move towards the downside, then in my opinion it's not part of a wave 4 anymore, and we're going to be looking at different scenarios. If we then look at the micro scenario I just explained, this ABC is the one I shared in the update section, and we were then looking for a 5-wave structure in a wave A. So this is a zigzag in a 5, 3, and then a 5-wave move to the downside, where the most common target area for a wave C is taken from with a trend-based fib extension from the high of A to the low of A to the high of B. And then instead of using the brush tool over here, you click on the trend-based fib extension, little mistake there, and then you do this, this, and there to the low of A, and then the most common target area for wave C is between the 1 and the 1.236, and as you can see, this has been very, very, very nicely respected indeed for then a bounce towards the upside, and that's exactly what you want to see in this particular scenario, which was also then the preferred scenario in this scenario. So if price is going to pump towards the upside and takes this high, that would be very nice. If this is the low of a 4 and we're looking for 5, you want to see this high taken over here. Now the bearish scenario, which is an alternative, is that we still have more downside to go, but then I wouldn't label it anymore as a wave 4. It has to be labeled as something else, and then a WXY in a potential wave 2 or a wave B, because then the problem is, if we zoom out, is that if this is a WX and we're looking for a 3-wave Y, which of course becomes unlikely, and I'll explain that in a second over here, then you still only hit the 236 and you don't even reach the 382. Even on the non-logarithmic chart, just a linear chart, the 236 has been hit, yes. But if we go down for wave Y and then potentially look at that 382, it's still not hitting the 382 as the most common target for Ys between the 1 and the 1.236. So if we look at a bigger impulsive structure over here with a finished wave 5, finished wave 1, and you want to look at a deeper correction, then preferably for a wave 2, you want to see the correction go to the 0.5 to the 0.786. These over here are the most common targets for a wave 2, with the 382 being rare, 886 is rare, and the 236 is very rare. And actually that happened here on the left. As you can see, 236, very, very rare, very bullish as well. So even if price goes down once more, is this part of a wave 2? It doesn't really make sense, right? It makes more sense to move towards the upside for then this to be the end of potentially a 4 and then look for upside in a wave 5. And then if we do look at this scenario over here, as mentioned, price did hit the 0.236. I also mentioned it is a very rare target for a wave 2. Now, in a very bullish environment, this can be a target like we saw over here as well for then a 3, 4, 5 to the upside in this finished scenario. So now what we're looking for is that if price is going to keep pushing past the 32.5k, then this could have been the low of a 2 and we're looking for a bigger 3 towards the upside, or we eventually reject once more to the downside and preferably be looking for price to move towards these lower levels. But if we look at the micro for potentially then another move to the downside over here in a wave Y, then if this is the high of a wave X and then a 3-wave W, 3-wave X, and you'll be looking for a 3-wave in a Y, or you could potentially then move X over here. But then, you know, what's with Y? You have to move it to the right as well because you want to see a 3-wave structure, or is W going to be over here? It's not clear in this particular scenario, right? Then a 3, 5, this looks to be a 5 and then a 3. I don't know, right? Like preferably if this is the scenario, I prefer this with X over here, and then you'd be looking for a 5, 3, 5-wave structure. 5-wave moves to the downside, 3-wave up, 5-wave move down. But yesterday, after this bounce that we got to the upside, you could say a 5-wave structure over here, but actually we can count a 5, so a 5 or a 3-wave structure is what you want to see, and then a 5, 3, 5 and potentially a wave Y. But this move to the upside had more of an impulsive structure to the upside, another 3-wave. We then got a rejection in 3 waves though, and then continuation to the upside with some bullish divergences, more bullish divergences for then this push towards the upside now. So yeah, lower probability for wave Y to be made, higher probability for upside. And if we then do go to the CVD divergences, then these are the ones that we had yesterday. Bullish divergences on the CVD, higher low on price, lower low on the CVD, where the target was this high, which has been taken. And if I go to the CVD chart, this is what you see. So price dropped to the downside, started to create bullish divergences on the yellow chart. And these bullish divergences were so deep out of nowhere, right? It went down very, very quickly that I was like, well, you know, I like to wait a little bit for more price information to wait and see what happens before I'm interested in potentially longer, right? Like, yeah, we do have a bullish CVD divergences. My personal strategy has a lot more different entry requirements than just this, and also a very deep retracement, sometimes out of nowhere, that can be a leading CVD divergence, meaning that price is going to follow the CVD divergence to the downside. So I like to wait and see what price is going to do, right? Give it a little bit of time. And if we then go to the 3-minute and we look very, very locally, what happened after this bounce is, first of all, you had this bounce, few candles over here to the downside, little bullish divergence on blue and yellow. But if you then look to the right side and we look at these lows over here and we look at the blue line, then you will see that if I put the cursor on this low and then on the blue line over here, and you look to the right side, we have a bullish divergence, higher low on price, but a lower low on the blue line CVD, as this line over here is lower than here on the left. So we had local bullish CVD divergences, and that's what I like to see, because bullish CVD divergences that are made very, very locally have priority. But that also gives me more confidence that this bigger bullish divergence with the sudden drop on the CVD is more trustworthy. So then maybe the entry is a little bit worse as you enter over here instead of maybe here somewhere. But that's fine, because in the end, we're looking for upside. And yeah, your entry, you know, like I think there's a quote that I once read that says, you shouldn't focus on your entry, you should focus on your exits or something like that. Like, I prefer to enter with a bit more safety, bit higher, bit of a bigger stop loss, but it's all about where are you going to exit and how are you going to manage your trade. Now, this CVD divergence did play out. We are pushing towards the upside, very nice indeed, and now we then wait and see what happens. We do have some news also today. Yes, at 2:30 p.m. Central East European time, we have some high impact news, the red flag over here. So whatever you do, make sure you trade safe around those hours. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.